The Zacks Rank, value, momentum, growth, and income all factor into Zacks Rank buys.
There is a familiar name flashing on the growth and income stock radar. And Todd Bunton, our growth and income stock strategist, is going to tell us what it is. This was kind of a surprise to me.
It was a surprise to me, too.
I'll let you do the unveiling.
Yeah, General Motors, GM,
Yeah.
came through my screen for both good earnings momentum and good income, which I'll talk about in a little bit. Of course, we all know their domestic brands, Chevy, Cadillac, Buick, and GMC. Huge international presence, too. They sell a lot of cars in Europe and Asia, South America. Still a little bit more than half of their sales come from North America, and that's really been the driver for them. U.S. auto sales have been pretty strong lately. It's recovered from the depths of the Great Recession, and it's expected to continue into 2015. And that obviously means good things for GM. The company famously was bailed out by the U.S. government during the Great Recession.
How long have they been off the government payroll?
I don't know when the government completely sold out of all their shares, but they're completely out of them now. So the government doesn't own any more equity in GM.
Right.
And really, they've emerged as a stronger company. They have a stronger balance sheet. Their debt's rated investment grade by the ratings agencies. They have a lower cost structure overall, kind of leaner, meaner GM is what we're seeing. And that's starting to show up in the numbers. The company delivered a big positive earnings surprise in February, and that prompted analysts to revise their estimates significantly higher for both 2015 and 2016, strong enough to send the stock to a Zacks Rank of 2, which is a buy rating. You can see with me I brought the agreement and the magnitude of consensus estimates, which are the two biggest factors of the Zacks Rank. And you can see a nice uptick in consensus estimates there for both this year and next year. And if you look at consensus estimates, analysts are expecting over 50% earnings growth this year from the company, about 10% growth next year. Now, the company is still facing several headwinds. They have the ignition switch recall that's been a headwind for them, and still they have a lot of underfunded pension liabilities. So those are the headwinds. But so far, the tailwinds are overpowering that with, like I said, improving U.S. sales, better cost structure. They're taking market share in the Buick brand. That's really been a highlight for them as they target more to younger consumers.
Right.
That brand's taking off.
And the dividend isn't bad.
That's right. So you're getting some good income as well. I was surprised to see they pay a dividend that yields 3.3%, and compared to their peers, that's pretty solid. Ford actually has a little higher yield at 3.8%, but Toyota, you're getting 0.8%, and of course Tesla I had to throw up here, no dividend yield at all. But the company recently increased its dividend by 20%. Not only that, they announced a big stock buyback. So they have some kind of activist shareholders that are wanting the company to deliver more, return more capital to shareholders, and GM's doing that. Like I said, they also had that investment grade debt rating, so an improving balance sheet, strong free cash flow, so good income potential going forward as well. And then on the valuation side, it's really almost too cheap to ignore here. They trade at just 8 times forward earnings. Ford's at 9 times, so those are both in the single digits. You can see where Toyota is, and then of course Tesla at over 500 times forward earnings. Not much of a value here, but I would say if you combine the good earnings momentum, the good income, the valuation here, there is a lot to like about GM. Of course, very economically cyclical stock too. In addition to the other headwinds, if the U.S. economy starts to slow down, or people can't get credit to buy new cars, then that's obviously spells trouble for GM. But the company should still, they've at least said they can weather storms better than they could in the past because of their lower cost structure. So could be a lot to like here in the stock going forward.
See if tax refund season boosts those car sales at all.
Yeah, it usually does.
Do you own it?
I do not.
All right, check out other stock picks, stock picking strategies, stock commentary as well on our website, Zacks.com. Link to it all off the homepage. Get on over if you're not there already. With Todd, I'm Terry Ruffalo.